Wow. Okay, so Coal India Limited just dropped their financial results for the third quarter. Uh-huh. That's kind of interesting.
Yeah, I mean, it's always a big deal when a Maharatna company like Coal India releases these figures. It really gives us an idea of how the economy is doing.
Right. And I see they declared a second interim dividend of 5.60 rupees per share. That's pretty good, I guess.
Absolutely. That's a solid return for investors, especially considering the face value is 10 rupees per share. So that's like a 56% dividend.
Okay, so a pretty good chunk of change then. I'm curious, what about the actual numbers? Did they make a profit?
Well, their consolidated revenue from operations was 1,02,917.27 crore rupees for the 9 months ended December 31st. So, yeah, they're definitely in the green.
That sounds like a lot, but how does it compare to the previous year? Was there growth?
Actually, it's a slight decrease from the previous year, where they had 1,04,913.59 crore rupees. So, it's about a 2% drop in revenue.
Okay, so a slight dip, but still pretty substantial numbers. I'm also seeing something about stripping activity adjustment. What's that?
Oh, that's an interesting one. Basically, it's an adjustment related to the removal of overburden from mines. Think of it like when you're baking a cake, you have to get rid of the eggshells before you start baking.
Right, okay, that makes sense. So, how does that impact their financial statements?
Well, they've had to adjust their stripping activity provision, resulting in an adjustment of minus 6,171.37 crore rupees. This kind of accounting is in line with Appendix P of Ind AS 16.
Okay, so it's like a kind of course correction for that process, I guess. Anything else noteworthy?
Yeah, they're also carrying forward a significant input tax credit of 16,127.3 crore rupees. This is because of an inverted duty structure where they're paying higher tax on inputs than on outputs. It's like paying full price for ingredients, but only getting to sell the finished cake at half the price?
Oh, okay, that's a pretty big credit. Will they get that back at some point?
It seems like it can only be used against future GST liability. So it's not a straight cash refund, which is kind of unfortunate for them.
Gotcha, that makes sense. So it's like a credit they can use later, but not really cash in the bank. Now, what about their subsidiaries? How did they perform?
Well, overall production from the subsidiaries was 543.36 million tons for the 9 months, a slight increase of 2% from the same period last year.
So, a small but positive bump in production. That's good. What about specific subsidiaries like ECL or NCL?
Right. So NCL had the highest production among subsidiaries, but there was also a notable 11% increase in MCL's production. On the other hand, CCL saw a decrease of around 9%.
Interesting. So, some did better than others, it seems. I also see they have a 50 MW solar power plant.
Yes, that's their Nigahi solar power plant, which is actually the largest solar power plant in Coal India Limited. So they are definitely diversifying into renewable energy sources.
That's a good sign for the future, I think. What else stands out from these results?
Well, they've also executed some MOUs for gasification projects and even one for critical mineral development, which shows they're looking at expanding beyond just coal.
Okay, so forward thinking in terms of both renewable energy and critical minerals, that's important. How did the financial ratios look?
Their debt to equity ratio is pretty low, only 0.09%. So they seem to have very low debt. And the book value per share is up by 13%. So it's a good signal of value.
That's all good news for investors, I guess. It's also interesting that their revenue from operations dipped slightly.
Yes, that was largely due to a decrease in the average selling price of coal, which actually saw a drop of around 84 rupees per ton, though that's offset by a 14% increase in other operating income.
So there's a little give and take in the numbers. That makes sense. I guess it's important to remember that these are unaudited results for now.
Right. So there could still be some adjustments once the full audit is complete. But, it still gives a great overview of their performance over the past few months.
And they mentioned that the statutory auditors reviewed these consolidated financial results. So that adds another layer of confidence, right?
Absolutely. And they had to consider the reports of other auditors too, especially when it came to subsidiary companies. This whole process has multiple layers of checks and balances.
Yes, that's good to hear. Also, they've had some issues with independent directors, I noticed that mentioned in the report.
Yeah, the tenure of 6 independent directors has expired and they haven't inducted a new independent woman director yet. That's why they've faced penalties from stock exchanges.
That's not ideal. It seems they need to sort that governance issue out pretty quickly.
Definitely. It's an important compliance issue, and something they need to address to maintain transparency.
Okay, makes sense. So let's talk about the earnings per share. What were the basic and diluted EPS?
The basic EPS for the 9 months ended December 31st was 47.79 rupees, and the diluted EPS was also 47.79 rupees.
Okay, so no dilution there. That's good. And they mentioned they follow the stripping activity accounting as specified in Appendix B of IND AS 16.
Yes, and they've also adjusted their stripping activity provision to match that. So it's a pretty comprehensive and thorough process.
Yeah, that sounds very detailed, I guess. It shows they're adhering to accounting standards,
Exactly. They're also very transparent about the input tax credit issue, how they are carrying forward those amounts.
Okay, well, overall, it seems like, there are a few bumps, but it's a solid performance from Coal India, right?
Yeah, they've declared that interim dividend of 5.60 rupees per share. And as we said before, that's a 56% return on face value. And, that's pretty good for investors.
Right. It's always good when a company gives back to its shareholders. That's a sign of a healthy company for sure.
And also, just a quick reminder for all our listeners, disclaimer, we advise investors to check with certified experts before taking any investment decisions. It's always best to get professional advice,
Absolutely. It's always best to be cautious when making financial decisions. So, any final thoughts on these results?
I think it's important to keep an eye on how the input tax credit issue is resolved and how they tackle those corporate governance issues with independent directors. But for now, the numbers look steady.
Yeah, and of course, it'll be interesting to see how their new renewable energy initiatives and critical mineral exploration shape up in the coming quarters.
Definitely, that diversification will be key to their long-term growth. So, keep watching that space.
Right. And before we wrap up, if you're finding this podcast insightful and you want to stay updated on more discussions like this, make sure you hit that like button, share this with your friends, and of course, subscribe to our YouTube channel.
Yeah, it really helps us grow and reach more listeners. So we appreciate the support. So yeah, what are our listeners thinking about Coal India's performance? Let us know in the comments below.